has started. So, officially, good morning. Happy Sunday. Hope you've had a great weekend. Thanks for coming by. Weekly market prep. It's pretty funny. This is, like I always say, it's my favorite day. I love Sundays. We're a couple of days away. We've been able to decompress. We've got a day before we have to get back to it. It's nice. The chimp's asleep, hopefully, in the cage. We can be very analytical, very logical, consider some things, thinking out a little bit, get some what ifs in place, yada yada. All right, let's do it. As always, education, illustrative purposes only, not advice, not guidance. We're not advisors. We're not brokers. Today we will posture. We'll look at the economic calendar. Again, I feel like our stance has been let's be willing to get chips on the table. We're bullish. Let's not get shook out of things. Let's stay with it. Which has represented a bullish mindset with always something that we're like, but we don't wait. We're like, but the but's been the VIX, right? Like, but if we see this, it's watch out. And so we're mindful, right? I like to keep a thermometer with me to make sure I know what temperature the water is, so that if it's getting too hot, we can just we better get out of here. Whereas if you look around, that's not the pervasive posture, right? A lot of people are like, it's like there's still this sense of like hard landing, doom and gloom, suspicion, right? People are suspicious. I feel like we've moved well past suspicious at this point. But, and there it is. We're always going to have our but. We're always going to have the, what are we looking for? Okay. We're not going to do any sector searching anymore, but we will do watch list maintenance where we get rid of anything and flag where we want to search. I feel like, and this is what I believe I said, I feel like industrials is a good place because there's been a couple of times recently where it looked like it was setting up, but the stocks that were on our list didn't have the same look. And I'm like, there's got to be a few other things out there that have a different perspective. So anyway, I think that's something that we should definitely do. Create an early week opportunity list. Of course, I have no doubt that our posture will continue to have us in the same place that we've been. And lastly, great week last week. I had at least 4 or 5 specific references to trading plans. I talked about it in Tuesdays and Thursday. I know Glenn talked about it. This is your last chance. This is what we're going to do. We're going to have your last chance to really get your best plan in place by the end of the year. And it's not, and then we'll do it again in December. I actually think we should go back to like a prioritization. We'll keep talking about it, but in 2025. In 2025, what my hope is that everyone is executing their new plan. We get like a month. We're going to give it 1 month of just execution. So we're going to take 4 weeks off. This is an executive idea that I just had. For 4 weeks, we're not even going to think about the plan. All we're going to do is execute as best we can in order to get observations about, okay, and then we'll come back and do it again. It's going to be great. It's going to be great. Okay. There you go. Let's do it. Let's get into it. Posture-wise, let's get a sense of where we are. It is October the 3rd. How is it October the 13th? Halfway through October. I have countdown set for my pending UK trip with my family. We're getting close to 60 days. 60 days. Oh, I'll miss you guys. All right. Let's do it. Here we go. October 13th. And we're going to start with the long term. Now, what's interesting, it's almost like it recognizes. So I'm going to zoom in just to the trends that we have for this discussion. And we've been talking about this green. We've been in it for a while. Got up, down, got up, but this time we didn't get all the way up. And then we broke, but then we got back in it. Tested right back in it, and we're kind of grinding along the bottom of it. We haven't made it back to the top of it. But I would actually say that we're still maintaining this same slope. And remember, the slope is what we score, right? In Georgia. How did everyone do in Georgia this last little bit? I forgot to ask. Did you guys, I heard it was less. I heard Florida got it worse. But did you guys do all right with Milton? Hopefully it wasn't too much. Okay. No issues in the Atlanta area. East Georgia got hit pretty hard. Got it. Okay. Well, I hope all is well. For me, I'm two things. I'm not going to change my score. One thing that we were looking at is if it doesn't start getting up here, then maybe we're going to reestablish. If we do reestablish, I feel like the red maybe. So now if this thing accelerates into the end of the year and we get back into the upper half of this, I think that's fine. Right? I think that's absolutely fine. I'm going to leave my score as is. Anybody changing theirs? Let's just kind of keep the conversation ongoing. I'm a 1.5. I'm keeping it there. Looks stable. Let's move on. If I see one that pops up, everyone's kind of in that same place right now. It'll be interesting when we start seeing deviations, and I hope you're comfortable. I mean, everyone seems to be when they're a little bit up or down. Let's go look at let's go look at 6 months. So here's what happened last week. We got to a higher high. Right? 1, 2, 3, 4, 5. So here it made a little bit of a higher low, and here it's making a higher high. That would kick the score to a 2. Do we believe that the angle is representative of a 2? So that's where it's like, what would we say the short-term trend is? Right? I don't think that I would draw this to this to this and say that's my line. This was kind of a recovery. So, right, it gapped down, recovered, gave us the V. I would say maybe from here you could do it. And depending on where this gets to next, 175 or a 2. This is where the discussion is going to be, right? Miguel makes a good point. He says he's already put his at a 2. A new all-time high has to count for something as well. The buyers have to get acknowledgement. Sandy's buying in. Look at you guys. I love it. Exactly what I was hoping for. If we are at a new all-time high, do we simply score it within its trend, or does that have a new bearing? Well, the hard part right now, Press, is that I don't think we have like a set. If you look back here, this was a pretty well-established trend, pretty easy to draw the lines and score it. We had some volatility, and so if we don't have a easily discernible trend to score, where we're like, oh, obviously here's a line, here's a couple of points on the bottom, couple points on the top, you map it out, here's the score. Here we're like, well, we had this V and then it pulled back, and then we had this minor pullback and it's making a new high. So what I think it is that we don't have enough to establish a couple of lines, put an angle on it, so there's still a remnant of scoring accomplishments. And yeah, I mean, that's kind of like this is where you'll find there may be a discretionary component of where you personally, whoever you are, end up. These guys are, those who put in, they're like, yay, new high. We like that that's doing that. If it doesn't, let's say this week it makes if it turns around and comes, and then we decide, hey, we're going to draw a couple lines and see how we map that, then we would move it. Based on that, Press, I'd like to hear where you're going to score it. Steven says, compared scores from the summer stayed at 1.5. The slope has moved lower. Almost gave it a 1.75 for the higher high. Still on the fence, looking for a better signal. Bob is staying at 1.75, still in the range. Okay, good arguments. 1.75. So I've got 3 1.75s. I've got 3 2s. I've got 1 1.5. Yeah, that makes perfect sense to me. Honestly. Gray Lynn's at 1.75. Okay. I mean, I was on the fence. I'm like, I could give it the 2. Here's what I like to be reflective of in my own market posturing. Am I letting obviously, if you said, Scott, would you rather trade in a 6.5 market or a 5.5 market? 6.5 every time. The stronger, the better. Right? We know that. We know that as these scores are stronger, that really helps us in our trading. So then, is there some element of bias, the desire for it to be bullish, where we're just like, oh, I'll just go ahead and you guys know we talk about that a lot. I'm always I want to be objective. So that's why we have these chats. I'm going to go with the group. I'm going to leave it at 175. We had ended up with 4 of those. Did we get 4? Or maybe it's 3 and 3. Maybe I said that wrong. 1, 2, 3. Bob says, think it's a want to be more bullish. Greg says that. It could be, right? Could be this you can see it is a new high. That's empirical. Right? That's empirical. It is higher. It is the highest point we've seen, and the market's pushing it there. People are like, oh, well, there's no volume. Well, there doesn't need to be volume. We're gonna stay at it doesn't have to be breakout volume. It's already in a 5. We need breakout volume when it's a 1 or a 2 market, right? And then we need that volume to contribute, that to give us that 0.75. So we're like, ooh, okay, it's pushing it. We don't need that right now. We're already in a trend. So I don't need volume. I know it can continue making higher highs without volume pushes. So that's okay. We'll get to that in a second. Great discussion. Great discussion. Let's leave it. I'm going to put it at 175 for me in there. So, but I know where we're at. A good range, 1.5 to a 2. All of that is right. That's what I like. Is I think that if you're in a higher score, you can easily see why someone went lower, and if you're in a lower score, you could probably be like, yeah, I can see why someone would do that. I didn't choose to do that, and that's where I think we're the most. We're the strongest as a group with this analysis. That's just my opinion. Okay. Volume. I can't remember these colored lines are the long-term lines, so they're not going to be as relevant. That just kind of gives us a sense as where they are relative. So, let's pop down to 1 month. Okay. Now where are we? We have these days here. Interestingly, at this point, this day is above average, but there's nothing there. That's like a half. I can't give that a full point. It's hard to even give it a point, but I'm going to say that's a 1, and these two together are 1. 1 to 1. 2 to 1, 2 to 2, and there it is. 2 to 2. That's how I see it. Do you agree or disagree? My first day above average does not. Is my pen out of commission? Yes, Miguel. That program I think was like disruptive, and so I uninstalled it. I just haven't found a new program that I wanted for Christmas. 2 to 2. What do you mean by these two are together? So this is an above average day press, but you'll notice that from here to here, it really, that's not a big drop, right? Steven said this one doesn't count anyways. 47 million, 49.3, 2.3 million is only, okay. So he's saying it didn't quite cross which is fine because we didn't end up needing it anyways. It actually closed exactly where the prior day was. No apologies, press. I think I was unclear. Sometimes I'm just like, well, I'm just going to lump these two together. Everyone's like, wait, is there a rule for that? What do you mean you're just going to do that? I think I've warned people about anytime someone says just. I'm just going to do this. Wait, whoa, what do you mean just? Just means you're not really following what's the standard protocol. So I'm just going to, no, okay. What I was doing was saying that there was a little bit of a sell here and a little bit of a sell here. And if you look at those two, they both had volume. So it's like, well, okay, there was kind of sellers there. So I said there's those two together equals 1 seller day. This equals 1 buyer day. Net result, a wash. But a wash is a 0.25, right? Remember that tie goes to the buyers. So we're just like, okay, that's a wash. Then these two are a wash and there's nothing new. So it's the same thing. Tie goes to the buyer. I'm a 0.25, which is actually good. There's times where I wouldn't think I have any volume score, but a 0.25, you can see we started down here. We ended up here. Easy slope, positive slope for our sanity check. Yeah, I think it's a 0.25. And so there we go for me. Unchanged. You scored more for buyers. Buyers had 0, sellers had 1 for a 0 score. Okay. Yeah. Major market. Let's get to our major market. Let's reload you. Reload you. Reload you. Yeah, I kind of want all of you fresh. All right, what do we got here? The question we were trying to decide was who ultimately had a better week, small caps or large caps. Overall, you can see we have a nice uptrend left to right. Who's leading? Technology and the broad market. In second place here is the Dow. Lagging behind is the Russell. That's this perspective. But we come down and we say, now what? Still an uptrend overall on this time frame, despite all of this volatility in here. The NASDAQ is up 14%. S&P 13, same initial. We have the Dow in third and the Russell lagging behind. This right here is a 0.5 for me. It's bullish. The technology is leading this bullishness. Everything is a good thing here. It's not stronger than a 0.5 because without small caps trying to move into a leading position, it won't be that. Okay. Now, though, we start to get to the more relevant and timely 66 days, and we say, what's going on here, and what's our interpretation of it? You can see that we had the Dow move a little bit for the first time into that position. Russell a little behind. There's the broad market just kind of doing what the broad market does. It stays in this position regardless of who's up here typically. And based on the technology hiccup during this correction, where you can see, right, the defensive, this was defensive, or excuse me, this was not defensive. This was an overreaction to interest rates that then didn't come yet and then that recovered. Now, here's the question. Press said this is the first time Dow on the top. What's our interpretation? It's only one time frame. Is this a defensive posture and we should knock our score down? Or do we not have enough information yet? It's only barely higher. You can see that it's from right around this period of time. That's my question. Possibly an embedded utilities play, right? Okay. The reason I ask that is because if we think, oh, the Dow on top, we're seeing that as defensive, we're going to lower the score a quarter of a point. Now, you can see that over here, it's really just been from this point to here. So then my question is, so Steven already lowered his. If you bumped it down to what? What is the score? That's a good question. Bob says no change. I'm leaning towards no change. I don't feel like this is, when I look at this, I don't think, oh, that's a defensive move. I feel like, this is just a little bit of a shake around. But I'm going to say I don't have enough information yet. If I go look at the 22-day and the 22-day looks more defensive, then maybe pull it back from a 5.5 to a 0.25. But if the 22-day looks ambiguous, or if on the 22-day I actually see strength from the NASDAQ and or the Russell, then I'm going to leave my score alone. So I wanted to declare it before I saw it so that I could then say, all right, what does it look like? Do I not have my full chart? I should have my full chart. Let me go back. That happens sometimes. I'm not sure. No, that's everything. That's everything. I don't know why it's not showing up there. And now we'll go. That's a great call out though, because it's been prone to do it. Now, if you go here, I actually don't see it as being defensive. On the 22-day, all starting from the same point, the Russell is the strongest. The NASDAQ is in second position. And the NASDAQ and the Dow are starting from the same place. If I thought defensive, then my thought would be the Dow would lead, right? But I think, Press, you're right. I think bullish at the 22. So I don't think that what we saw that ended up with the Dow on top is a result of a defensive shift. It just is a happenstance. That's why I didn't wait. That's why I didn't want to score until I saw this. And I wanted to make sure I established what I needed to see before so that I didn't retroactively maybe. Nope. This is what it is. So for me, unchanged. Give me your thoughts. Are you changing yours? Are you raising yours, lowering yours? So I'm going to keep mine at a 0.5. I still think it's a bullish representation in the major market. Okay. Sector. This is one where I thought maybe we could see an uptick. So, but I've been saying that. We've been saying that every time. Now, the ongoing strength in the utility sector has it just firmly at the top of the 200-day chart. After that, and still ahead of the market, we have communication services and financials. And just a tick below, industrials. So we have utilities, which we are now potentially reevaluating to understand its place within the shifting and aligning in business cycles, where we're like, wait a second, but if there's so much money going into AI and the increase in AI, because there is, right? There's a lot of server power there. Then on top of that, you have crypto markets. There's a lot there where you're like, this is starting to become an energy economy where we need the energy. And it's an interesting thought process, right? Technology. So if you look, let's just pretend utilities wasn't there. These are what's at the top. Communication services, financials, industrials, and then technology. And then after that, you have staples and healthcare and materials, energy, and consumer discretionary. So it's like bullish with a side of maybe we're bullish on electricity or on energy too. Me a little bit. Okay, let's keep going. Let's drop down to 133. Bam, utilities just raging. A freight train on top of everybody. And then there's everybody else. Yeah, you've got all kinds of stuff in here now. You got healthcare in there. But you've got mostly good stuff. You got staples, industrials, financials, technology, healthcare. It's all in there. Who's lagging? Energy. Now we look to see if we can find any of the rotation happening. We go to 66 days. So here's where the test is for utilities. It's consolidated, and it looks like it's going to bounce. So if you're going to trade it, you're going to trade it now. But the question is, does it maintain this? Because all of a sudden, what do we have? We have industrials shooting up in there. We have financials shooting up in there. So if you start to say, I'm going to give less defensive weight to utilities because it does seem like it has more growth, then you add the fact that we had 2 growth join. You've got materials here, and then look at, and then you have staples. Is that enough to push us to a 0.5? Oof, I don't know. I'm going to actually wait one more week. I'd like to see technology give it a little bit more on this time frame. I thought if I was close, I would do the same thing. We do have 2 growth here. I mean, I'm close. But I'm going to wait. Let's just see what the 22-day says. Obviously, energy is at the top of this. Industrials, comm services and technology, financials. So this is good, right? We knew we had a little bit of an energy bump due to Middle East conflict, and that we see. But if you look, the next 4 that are in a leading position are the 4, right? We have industrials, technology, communication services, and financials. Those are strong. So yeah, I think we're getting closer. We're getting closer, but I don't see it today. So I'm going to leave mine at a 0.25. Is anybody pushing into a 0.5 yet? Is anybody there? This sector rotation has been interesting because for so long it was like the strongest part. And now it's like the laggiest part, right? We expect volume to get to 0.25 or 0 as we trend up. But sectors, we definitely expect to look stronger. And so, yeah, it is cautionary press because if we didn't see those things, we would probably have, a 0.75 on the sector, 1.25, 1.5 on VIX, and all of a sudden we're in the 6s again. We don't have that. So the VIX, which is representative of institutions, and sector rotation, which is, again, also representative of institutions, there's some concern. Underlying strength is good, but it's not aligning where we're like, this thing's ready to just kind of pop and run on its own. I think it's close. Right? I think it's very close. All right, let's keep going. Last thing. Let's get to the VIX. Yeah, there's nothing to score here. We already scored it down. So we're at the same point we were back here. We're coming off of it. If it turns a little bit. So here's the thing for me is I think it could go up like 1 day, 2 days, and then turn back down. The problem is if it turns up from here, I'm probably going to hedge because it's a higher low and I'm near 20. I prefer my hedges below 20, but at the same time, I want you to notice that right here, it popped back a little bit. 2 days, up for 1, and then right back over. That was nice. And then the next move was nice. yeah, this is just, it's a weird enough looking place. The fact that it got back up to 20, I don't see anything in the market that indicates that. So maybe it's just weird, but we gotta respect it. That's where I'm at. This is a concern for me. I'm ready to hedge if I need to. It's not going to change my score. If we get a higher low next week, it will. It would drop it. But I'm going to leave my score the same. We already dropped it last week, you can see, for the higher high, and we're still at that same point. Okay. I'm remaining at a 5.25, which is great. I mean, we're in October. We know what can happen in October. We know the market's propensity to get shook around in October. And if this is the October, let's get to the SPY. Let's get our watch list up. If this is the October shakeup right through here, that's not much. We're already moving to higher high. I think this looks fantastic. Okay, 5.25, bullish. Bullish. Reduce the gas tax by 30, so prices are around 2. Wow, that's cheaper than we are out here. In Utah, we're probably between, I don't know, the 85, that's probably like 325. And if you get the 89 or 91, the higher octane, that's probably 375. Probably worse for press, I would imagine. He's in the 4s, I would bet. Same range. Okay. 5 plus. Damn. California sucks. Apple. Apple got a signal. It's on a little bit of a pause, possibly a hiccup. I'm fine with it. I still like Apple. I still think Apple is viable, so it is remaining on my list. Aflac gave a signal, and I put out an alert for that. We had a nice higher high. We pulled back, higher low. But remember, this thing could go a little bit of a hiccup, so we're not going to lose faith if it does something like that. As long as it doesn't break support, we're going to remain. Amazon looks good for a bounce. That's definitely helpful for everything in consumer discretionary. I mean, look at that. We're only in the A's. AXP continues. It's an interesting trade. I would imagine you maybe took some profits along the way, got out, maybe still in some. Bank of America popped, earnings coming up. So I would say for financials, whatever you're in now is probably it. You're probably about to run into earnings, so you might be looking to close prior to earnings, and then you'll wait for post-earnings to see what becomes tradable next. I do like BAC, though. I'm going to put it on my list still. BK, I mean, it's a little overextended right now. Just got earnings. Going to wait, see if it pulls back, gives us something new. BLDR, I'm still keeping it on my list. If you have a spread trade or you have stock, you might still just be grinding along. This thing never broke support, never busted, so it's never gone right, never gone wrong. If you own options, you're just kind of bleeding on it, so that's not great. Carrier still looks viable for an industrial, and we know industrials still look pretty good. Still Caterpillar. Our watch list is strong, right? It's full of good stuff. Amazon, I think CMG. I know Sandy took this, probably in some profits. Still holding? Probably so. Costco? Ooh. So Costco is a maybe for me. If Costco can hold the 50 and get a higher low out of this little switcheroo, then I think there's some viability there. There's the Dow. Still looks pretty good. Fastenal. Bam. It's not tradable. It popped on earnings. If anything, now I just got to wait to see if it goes through a consolidation after this. So, yeah. GBTC. Let's see. GBTC, no. GE still looks strong. I mean, it's just kind of like eased up out of this. We were looking at it. I hadn't been watching either of these long enough that I felt comfortable, so I'm gonna keep watching them. I don't feel like they're setting up right now either. So I guess we'll just kind of keep an eye on them and see if they start to give another setup. Gold was definitely, still is. We've been talking about the viability of gold. Speaking of, I need to buy a couple of bars of silver for Christmas. It was a popular gift last year. Google looks good for sure. I like Google. Anybody trade Google? I think if you looked at that, you could see that as a viable entry. And if it starts to bounce more, then it's a confirmed entry, right? Home Depot. Home Depot is very strong in the consumer discretionary space. Clint says yes, love it. KKR is one we're in, continues. Not as fast as we wanted, but it's moving, so okay. Definitely watching for if this momentum is over, the trade is over. That's my stance. MasterCard, McDonald's, maybe starting to move. I'd put that on my consumer discretionary list. Meta, definitely with Google. Meta looks great. Meta looks close. Look at that leader. Strong. Just a little bit of a flag pullback here. And then what? Looking for the trade coming out of that. MMM. I had that one, but the fact that it's taken so long and this is what it looks like, I'm actually saying no to this. I'm actually going to say no to this. MS, it's very strong, but it's not tradable now. The watch list is amazing, right? Microsoft, I'm going to put it on the list with Apple, but if it doesn't bounce, it's not great. NDAQ, iffy. Netflix, still strong. We'll put that up with the communication services crowd. NRG, utilities. If you like utilities, now is our time. So early this week, we'll consider something like NRG. NVIDIA is still strong. We'll put PEG with NRG. So possibly, let me ask you this. Who here would take a utility trade? PGR, I think Aflac was much stronger. PLTR, just closed it, but if it gets a pullback, I want to trade it again. I'm thinking the same, Bob. I'm thinking I would. We'll wait for Sandy. Love it. Yes for press. Q's looks pretty good. Southern. Put Southern on that list. MRG, PEG, SO. Those are three utilities that we're looking at. I think Meta looks good this week. PLTR is overextended. I'd like to see it pull back. I'll preemptively put TSM on because I know that looks good. SPY. I had Duke, I think. SPY looks good. Tesla. Terrible robo-taxi service, apparently. TSM. Oh, TSM reignited. Maybe give it a little bit more. Here's up. The dollar's got some strength. The VIX, we've already looked at. VST. We'll put VST in the utility group. Walmart, it's a little sideways. Let's look at Duke. Duke was on the list. I don't remember why I bounced it. Because it broke the 50. I didn't like that. I didn't like that. I said you're out of here. Yeah, we don't have the tolerance for that. You know? I have no patience. And I hate waiting. With Columbus Day holiday. Oh, wait a second. Is that tomorrow? Is the market closed tomorrow? Holy crap. I'm out of sync. It's open. The market's open tomorrow? If the market's open, we're open. Period. Yeah. Banks are closed. Federal offices are closed, which I don't care about either of those. Bond markets will be closed. I don't care about the bond markets. So, yes, stock market's open. Option market's open. Market Watch Group open for business. Good. I'm like, actually, the whole time I knew that. Obviously, if we needed to make a change, I would have made the change well in advance. Of course. All right. Let's look at the... Can I check out knee? Yeah, that was on our list, or at least we saw it, but we maybe didn't take it. Knee. I think knee sits in the rest of that group, right? I think so. I mean, there's a group of utilities that are like a little stronger. They're in this pullback. If you're gonna do it, that's where we're gonna do it. Is in that group, right? That's the strength that we want if it's gonna continue. What else? Materials led by precious materials look good. Communication services a little flat but still strong. Energy, I think it's iffy, but we'll see. Financials, strong. Industrials, strong. Technology, increasingly strong again. Staples, easing up. Utilities, still strong. Healthcare, easing up. And consumer discretionary, it's either a hiccup and it's going to stay strong, or we're going to have to reassess our thoughts on consumer discretionary. Okay. Oh, baby. Where are you? Trading plan. Well done, everyone. I believe at least a good number of the group walked away from last week with a much stronger. Remember the goal. Get it. I said 0.7, but realistically, on the first pass or the second pass, you're just trying to get it past a 0.5. Can I get it to a 6? 7 maybe. That's the goal. 6 or 7. Well, then we'll refine it. But with just the discussion we have and the trading plan sample, you should have what you need to just kind of give it a once over and say, yeah, I'm going to get mine to a 6 or 7. And then we'll see what we can do with it in 2025. That's the year of the trading plan. 2025 is the year of the trader. This time, now this is an interesting one now. This comes from a trading plan outline that I would use when I would coach people one-on-one. So in that regard, I always knew our time was limited. So one of the things that I wanted to make sure I left people with was confidence that they don't need somebody else to analyze the market for them, right? Confidence that if they just got plunked in front of the market, they could sit down, run the analysis, and be like, okay, all right. Yeah, whether they looked at it last week or they hadn't looked at it in 6 months, doesn't matter. You sit down, you run the numbers, you look at the analysis, and you're like, okay, I know what kind of market this is. I know who's in control. I know what the institutions are doing. I know what the traders are doing. I have a good sense for the news and what people, right? Like, that's it. Right? Do we think we have a crystal ball? No, we think we have a good ability to sit down and then be able to create a trading plan. How many trades, how much risk, get a watch list put together and start going forward. That's it. But in our group, you're here. But I like to have the same thought process. If at any point you're like, hey, I've gotten what I needed from this group, I'm moving on. I'm a lone wolf. Maybe you're a lone wolf. I don't know. I hope you found your pack. It's good to find a pack. But if you decided you didn't, one thing I would say, when I hear back from people, this routine is what I hear about. I heard one time from somebody, like, hadn't heard from them in 7 years. I get this email. It's like, Scott, I don't even know if this is still your email. But I just wanted to check in. First thing he said, I do my market posture every week. It's just kind of this... you orient, it's this lighthouse. You orient yourself around it. When things change, you're going to change. You know you're going to see when things start to get a little rattled. The VIX is going to talk to you. Not always clearly. We see that when you're in the weeds. It's not like, oh, it's just so clear. Looking back, you're like, oh, it looks better than it did when I was in it. In it, it looks a little different sometimes. We all recognize that. But just the fact that we're like doing it. So that's the process I want you to take when you write this up. Write your process. What do you like that we do? What do you do a little different? Like, put it together. You might add something to it. You might say, hey, I want to add the bond market. I want to put the yield curve analysis in mine. Great. Put it in there. You might keep the same 10-point score, then say, I'm going to put 3 extra components that just sort of give it a little extra of the 100%, whatever it is that you look at that helps you to see the market, to kind of be like, if we don't have that, we're going to react. We're going to be late. We need to be able to see it so that we're ready to jump, right? We're just coiled, ready to pounce. So that's it. That's, a brief statement of what I look at a 5-year or a 3-year weekly chart, and what am I trying to do with it? And just like, that's it. So if you look at a finished plan for this section, yeah, I'm still thinking about those British baked potatoes. Of course I am. Market forecasting, long-term trends. Just what am I doing here? I went pretty granular. Draw trend lines, connecting highs and lows, ensuring they capture the long-term direction. Observe the consistency and steepness. I'm looking to assess them right with a 3-year. What did I say? Oh, good catch. Oh, I can't edit it right now. I have to request access from myself. Sorry. Oh, but this could be someone else's plan. But I'll change it to 3-year. This is just a sample. But you're right. Okay, so what else? So you can just kind of see, what are we doing? We conduct analysis of 6-month. We look at volume on a 1-month daily. We look to find averages, right? So this is a good written assessment of these. Major market. What am I trying to do? Sector rotation, VIX. So this one is pretty comprehensive. And I offer it for you to to use, to steal, to incorporate. We are a cohesive group working together to carve it out. So then you're not done yet. Then steal and modify. Beautiful. Beautiful, beautiful. Then it's posture. Remember, we move from market posture to trading posture. That's day to day. Tomorrow morning, we talk about trading posture. Are we ready to trade today? Just because we're 5.25 doesn't mean we just slap trades on all the time, every day. Bullish, bullish, bullish. We're still strategic. So that's why trading posture is different than market posture. Market posture, I'm bullish. Trading posture, I want to be bullish, but I'm strategic in picking my opportunities to shoot the shots. Implications. Yeah. What are we going to do? I'm looking to trade more risk, more trades. Options are still pretty cheap. I'm going to buy a lot of options to capitalize on these 5 to 9 day trades, yada, yada. I'm still looking for hedges. There it is. Section 2, right? Let me go back to the blank one. Section 2. Don't forget, what do we look for out of the posture for hedging? Right now, we're seeing one of the signs potentially setting up. As bullish as we are, we still find ourselves looking at that potential higher low saying, hey, I don't like that. I'm going to be careful if I see that develop. We're watching that this week. That's our butt. Anyway, all right. Good. Before I go, can I look at Lennar Home Builders? I think we kicked XHB off our list recently. And I can't remember. Lennar. I mean, they're still up there. They're still holding a little bit of a head and shoulders, and it's at the neckline. If it breaks the neckline, watch out. If it holds and bounces, then maybe we can make a run back to this 190, 194 level. I would think that interest rates coming down is helpful for the home builders, right? But sometimes we don't see immediate connections of things like that. So, all right. Great to see everybody. Go enjoy the rest of your Sunday. Definitely looking for trades again this week. We've been seeing a pretty good, steady stream of alerts. So hopefully that continues. Yeah. Thanks, everybody. As always, happy trading.